Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is David Weisberger. He's the co-founder and CEO of CoinRoutes. I love this topic. Ignorance of crypto assets is not necessarily bliss.
Yeah, I tried to get funny with my latest posting.
So the question that we always kick off with, crypto assets at their core, what are they?
I mean, the funny part is the core of crypto assets is about trust, and it's about establishing trust between parties that don't know or have any reason to trust each other. So that is the core of Bitcoin, to be able to do transactions. In other crypto assets, which might be platforms like Ether or different models for different companies, to be something inside their network. It's trust within the network to be able to accomplish something. And I find it very interesting that the ethos of cryptocurrency is all about decentralization. It's all about, okay, now we don't need a central trusted oracle to tell us exactly what's going on. Yet, if you look at the way crypto assets trade, and predominantly the way Bitcoin trades, it's actually way less integrated, way less trustworthy than markets like equities trade. And I find that irony to be rather interesting. And there's some reasons for it, but that's the key here.
So then, is centralized clearing better than decentralized trading in crypto?
It's not about clearing. It's about, look, centralized clearing makes it easy for people to trust what they're trading, right? No one wants to be, like in Bitcoin, you can hold them on little wallets or on computers, etc. Nobody wants to worry about that. They want to just own an asset and have it be safe someplace. They want to be able to pay somebody else to do that. Now that problem in crypto is being worked on by a lot of very smart people at various banks, and it's not my area of expertise, although I'm very involved in understanding what's going on, because CoinRoutes, we do routing, so obviously we have to know about what's going on the clearing side. But what I'm talking about is information and centralization of information, or at least access to information from any individual place. So let's say you're trading. You are trading over here at a price on the Nasdaq exchange. And if you buy or sell Microsoft on Nasdaq, you have a very sincere expectation. You know you're not going to pay much more than if you traded it on New York or on BATS or any of the other exchanges. Now, there's rules in place about that. Now, if you're trading in Europe, if you're trading on the LSE, you're not going to get a wildly divergent price than when you're trading on BATS. But in crypto, you can get wildly divergent prices because the exchanges all operate in independent silos and don't talk to each other, which is exactly what CoinRoutes is meant to be. We are a company that helps bridge in between the exchanges, both for market data and for routing.
So why should cryptocurrency investors, why should they be aware of all prices across all markets? It sounds like it would get a bit tedious trying to figure all this out.
Well, I mean, in equities it would have been tedious too, except for the fact that every single firm has smart order routers and every firm has consolidated order data feeds. Nasdaq sells a lot of different consolidated feeds. BAT sells a lot of different consolidated feeds. There's consolidated feeds in Europe, there's consolidated feeds here. In crypto, there aren't very many. In point of fact, that's why we founded my company to do that. There have been examples that are just jump off the page at you. One I put in the article happened on an exchange, and I don't want to pick on them.
Is this the chart that we have? The one that sent over? So we'll take a look at the chart here.
Right.
And then what are we looking at?
So we're looking at somebody traded on one exchange, in this particular case, ItBit, and they were buying. And they were buying when the price of Bitcoin, more or less everywhere, was around 67.20, give or take. You know, somewhere trading in that area. And they started buying on ItBit like 40, 50 coins at a time. And you see, ultimately, they pushed the price over a 10-minute period up to 75.50. Well, everybody else was down at 67.20. Well, when you're doing that, you're spending way more money than you need to. And the reason it's happening is you're not looking at all the other prices. This sort of thing happens every once in a while. Almost every day there's some smaller events, even in Bitcoin. But when you look across the 1,000 coins that trade, it happens almost every day. And it's because people aren't aware of the prices everywhere. And what you need is companies that will actually pull that together. Now, I don't want to do advertisements, but that is what is needed. And it's not just us, but it's a necessary component. And it's something the SEC cares about. When you look at what they say about ETFs, they care.
Well, how do you settle them if, in fact, you can't trust prices across multiple exchanges? I would imagine that's the SEC's concern.
Well, I think their concern is investors paying incorrect prices. Things that the standard we use is called best execution, which roughly means that when you buy, you have an expectation that you didn't pay anything that was out of line and that nobody took advantage of you in your trade. Now, I'm not saying anyone in particular is getting taken advantage of, although that may be happening. The reality is, if you don't know, then people will ultimately suffer, and that's something the SEC just can't abide. And you have to understand, Bitcoin and Ethereum and crypto is predominantly a retail asset right now. So they care about retail a lot, even though they have no jurisdiction over the spot, they definitely have jurisdiction over the ETFs. So they care about this market structural, and they want to see it be a little bit more mature. And so Best X is something that's very important to them.
So how do you avoid overregulation, and is self-regulation a viable solution?
God, I hope so. I mean, the reality is overregulation is, it's not so much that the regulators want to do things that are crazy or bad, but the regulators have little boxes that they're put in. So the SEC can regulate certain things, the CFTC can regulate certain things. In some cases, there's a need for congressional legislation to change. And that's really hard these days. Let's just leave that one there.
Yes.
So trying to actually regulate is hard, and the problem is crypto, and I think we talked about this once before, a crypto asset can act like an investment, so you regulate it like an equity or another investment, but it can also act in utility. It can also act like a commodity or a currency. And so if you take the banking regulations and line them up with the investment regulations, often there's no way out. Often they contradict. And so it's really hard. So the hope is, and there's been some really good progress this summer, groups including ItBit, who I just talked about, as well as Gemini, Bittrex, and I think it was Bitstamp, I can't remember, got together, and they're trying to form a self-regulatory organization. And groups such as I helped out with the Global Digital Finance Initiative have created code of conduct which have these sorts of things. And if the industry gets together and does this, I think that you could end up getting somewhere which is a pretty good outcome.
All right. Well, thank you very much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.